All right, so what a day we had yesterday. I'm probably going to be putting this out like midday on Tuesday, so obviously anything could happen. I'm recording this the night before. First things first, if you get value out of the video, please like, subscribe, comment, check out those links below. Very much appreciate the support. So I wanted to talk a little bit about stocks and just things in general, because a lot of people are panicking for obvious reasons. We've seen very, very high volatility. We've had, I believe it's the worst 3-day stretch for decades. Literally, we're down 10% in a week, which is very, very rare. And a lot of people are probably panicking, wondering what to do. And the solution is obvious, and in twofolds really. It's number one, you need to go over your convictions in your existing positions, number one. And number two, you need to be looking for opportunities. And personally, I have not sold $1 of any stock that I hold, not $1. And that's the position you really should be in. And a good way to think about investing is, hey, I like this stock, or I like my index fund, whatever it is. If it went down 20% next week, would I? Let's say it wasn't anything to do with the company. It wasn't anything fundamental. It was, a war or tariffs or a virus or something along those lines. Would you still like it? And if the answer to that is yes, you don't care. Not only would you not sell, you would be actually desperate to buy more because it's at a discount. Another important thing, too, is that I'm someone who likes dividend growth stocks. And when the price is lower, your yield is going to be higher. Now, again, that's on stocks that you end up buying, the ones you already own. Obviously, it's going to be the same as it was when you bought them. That's not going to change. But for the new ones, that yield is going to go up. So lower stock prices in the here and now is not necessarily a bad thing. Now, a lot of people know this, a lot of people don't know this, so I'm sorry if I'm being redundant. But you have to view this as an opportunity. That is the only positive way to think about it. And when it comes to tariffs, a lot of people are panicking, but you got to keep in mind that the market prices this stuff in very, very quickly. The massive drawdown we've had recently is the market pricing this stuff in. We are going to need to see more bad news or more craziness for the market to go down further. The market probably is already pricing in a decent chance of a recession. Now, again, if it's a worse recession than expected, obviously that's going to be bad news. If Trump starts upping the tariffs or talking even more hawkish, then yeah, that's going to spell a lower stock prices, lower indexes in general. Personally, I don't think we've seen the end of this yet. But on the flip side, I think it's also fair to say that it would be the worst political decision in history if we are still talking about this a year from now, or even 6 months from now, debatably. But for sure, by the end of the year, if this isn't a thing of the past, then this is a terrible, terrible move, like a terrible move. And for the obvious reason that if this stuff continues, it's going to mean recession. It's going to mean, not only is it going to mean recession, it's probably going to mean a recession paired with inflation, which is like double bad, which virtually guarantees that, or maybe not guarantees, but very likely that the Democrats take the House, the Senate in the midterms, and the Republicans lose the presidency in 2028. And I don't see why anyone would, like, if you're in the Trump administration, why would you do that? Like, why would you do what you're doing if that's what the goal was? Now, I think the only logical conclusion is they plan on getting this stuff out of the way fairly quickly. Now, they might have to wait it out a little bit, but I think they're planning on getting it out of the way fairly quickly. Now, there's also a lot of talk that they want lower interest rates, and that's something that I think is probably a given as well. And this is one of the reasons why, even though in the very near future I'm fairly pessimistic, doesn't mean I'm not still buying. In fact, I'm actually buying. I'm planning on buying, and I've already bought more than I normally buy on a weekly basis. So that's important. But the reason that I'm fairly optimistic long term is that by the end of the year, the Fed's probably cut 2, 3, maybe 4 times. They're almost certainly going to be doing QE. So what makes you think that we're going to still see a very, pessimistic market? It's possible. We could be in a deep recession. That's the one thing. We could still be in this trade war. That's possible, but I just don't see how the Trump administration can be that stupid. And this is another big problem with this issue as well. So there's so many people that they're so partisan, and it's like they're you have probably what, in my estimation, maybe 70-80% of the population that fall into one of two categories. Either Trump can do nothing, he could cure cancer tomorrow and people would still find a problem with it, or he can do no wrongs. Right? These tariffs could lead to 10% inflation and record unemployment, and people still would be defending him. So that's the big problem, is that people need to wake up. The reality when it comes to this situation is Trump is right about a lot of his concerns. He absolutely is right. I mean, you take Canada, for example. On average, we are tariffing them. Let's say go back a year or two, right, prior to this administration. On average, we are making it more burdensome for them than they are for us. That is reality, and the average country, that is also the reality. But on the flip side, when you understand economics, just for lack of a better way of putting it, basic economics suggests that tariffs certainly can help some industries, right? When it comes to tariffs, Trump is absolutely right that putting tariffs on foreign autos, that absolutely will help people within the auto industry, but it's going to hurt more than it's going to help, because it's going to make stuff more expensive for the average person. Yes, it'll put more money in the pocket of people in the auto industry, but it's going to take more out of the average persons than it's going to put into the average persons. And this is basic economics. And the other crazy thing that it just boggles my mind about this situation, and it just proves just how ignorant the average person is that, I mean, you take Canada, for example, right? Canadians overwhelmingly are upset at Donald Trump for what he's doing. But by looking at our reaction to this situation, it just proves that we're not actually helping ourselves. Because if tariffs were a bad thing, then we wouldn't impose tariffs on American stuff. Because, again, the fact that this needs to be explained is embarrassing, but there's a ton of people out there that don't understand that by putting tariffs on American goods, you're making things more expensive for Canadians, and vice versa. Right? So if Trump is wrong for doing what he's doing, then Canada must also be wrong for doing what they're doing. And this is just the massive blind spot that people have. You have to pick one. If Trump is wrong, then Canada's wrong. If Trump is right, then why are you so upset with him? So this is why the average person is having so much trouble getting by these days. Is they can't get stuff like that through their heads. They can't connect the dots. So that's that little rant. But back to the markets. Another important thing that I wanted to point out here is that, so let's take the S&P 500 here, right? If we go back 5 years, right? Let's go back 5 years. We are up, and this is 5 years from this, basically almost exactly 5 years ago, right? The S&P 500 is up 82% over that amount of time, right? So almost doubled, right? Even after this massive crash that we've had recently, we are down about, what are we down about? I think the S&P is down about 13 or 14%. It's too small for me to figure it out there, but it's down about 13 or 14%. So we are not far off of bear market territory, but look at how much we are still up, even after this big pullback, right? So we're still, even after this pullback, if you would have bought the S&P 500 5 years ago, you still would have averaged a 12 to 15% return. That's really good. That's really good. So when in doubt, you really have to zoom out on these situations, right? Let's look at the NASDAQ, because the NASDAQ's even more pronounced. And I'm not saying necessarily pour everything into the Nasdaq and the S&P or into whatever stocks. I'm just talking about, you know, generalities here. The Nasdaq, even after this crash, is up almost exactly 100%. So you almost exactly would have doubled your money by buying the Nasdaq 5 years ago. Now, a lot of people, to be fair, are talking about, oh, you know, there still isn't that many deals in the market, and frankly, I disagree. Like, I'm surprised there isn't more deals, to be honest, but I've noticed probably, you know, 10 to 20 stocks that I was not buying a week or two ago, or especially a month ago, that I am now buying. And I'm not going to go over them, you know, directly because this video would be way too long, but there certainly are some deals out there. There are definitely some that are still very expensive, right? I mean, like your Nvidias of the world, like these kind of stocks, yeah, they're still way too expensive. Like, they're still way too expensive. But there's definitely a lot more deals out there in the market, and this is a long-term investor's dream, right? This is the last thing I'll leave it on here, is that and a lot of people are probably like, oh, well, how do you not have any anxiety over what's gone over the last week or two? But first things first, honestly, I think it's kind of like a genetic thing that I just don't get overly emotional about this kind of stuff. But also, it's like you have to understand reality, right? Like my favorite saying of all time is, you know, an accurate understanding of reality is essential to getting a good outcome. And if you want to get a good outcome when it comes to investing, you have to understand reality. And what is reality? Reality is, after every single one of these crashes, the market comes back. And the best time to buy is when the market's down 10, 20%. Like, that is historically, that is the best time to buy. So why would you not be buying right now? Now, it doesn't guarantee that this is the bottom. But what it does say is the market's trading at a discount. Now, honestly, I don't know what the PE is on the S&P right now. I think it peaked out at about 21 or 22, so that probably implies that we're around 19 or 20, just give or take. So that is a little bit more than this historical average. I believe it's like 17, 18, but honestly, it depends. If you go back like 150 years, it's lower than that. But this century, I think the average is like 17 or 18. So we are maybe slightly overvalued where we're at right now, but slightly overvalued, like that means that maybe, 55, 60% of stocks are overvalued, which means that 40 to 45% are either fair value or undervalued, and there's probably 10 or 20% that are clearly undervalued. So that's my whole point here, is that they're absolutely positively. I think that there isn't as many deals as if you'd have told me, you know, 2-3 months ago that the market would be down 15%. I probably would have said, yeah, there's going to be a lot more stocks on sale, a lot more good deals out there, but it's not as if there's any shortage of good companies. Like, honestly, I think there's, just on my watch list and stuff, I think there's probably 40 or 50 stocks that, just based on my calculations, are buys where the market's at right now. So that's just my 2 cents. I've gone on long enough here. So like I mentioned at the start of the video, please like, subscribe, comment, check out those links below, and stay tuned for more.